I just got this email that a digital product business listed for sale by Empire Flippers has been reduced in listing price from a 33x multiple to a 20x multiple. Now, those multiples, they are on a monthly basis. I prefer to express multiples on an annual basis. So on an annualized basis, this would be, or the 20x multiple would be a 1.66 multiple. And this is a substantial drop in listing price. So I wanted to take a look at this listing here and see if I think there's any opportunity and share my opinion of the business's valuation. All right, let's head on over to that listing here. And one thing I gotta say before I jump into it is that I really like digital product businesses, and I own some digital product businesses. One of them I actually acquired from Empire Flippers back in August of 2024. It's December 2025. So a little over a year ago, I did acquire a digital product business from Empire Flippers. It was quite a bit larger than this one here, but nonetheless, I like digital product businesses because fundamentally they have no cost of goods behind them. Right? It's a digital product, so you just keep reselling it and it doesn't cost you anything to fulfill the order. I love digital product businesses here. Now, let's talk about this one here. It is in the technology, news, and education niche. The pricing period is the last 12 months, so I would take that to mean that it is based on the average of last 12 months profitability multiplied by 20 to arrive at this listing price. And the details. This listing is for a software engineering related website started in 2016 to help educate developers. Let me get my little annotation tool out here. The site has a lot of free content alongside paid courses and also earns from display ads. The site comes with a strong presence on YouTube, with 16,600 subscribers and an email list of 17,000. The owners of this site have found success in turning the content already published on the site into videos for YouTube. One of the owners of the business is featured in the one of the owners of the business featured in the videos. I was thinking about the significance of this. We'll talk about that in a second. On both YouTube and the digital products/courses, some course/content creation is also outsourced to freelancers who generally earn from a portion of course sales. These freelancers are likely to be happy to continue working under a new owner. This business does particularly well when new courses are launched, particularly around Black Friday, as can be seen in the bump in revenue in November and December 2024. And here is the earnings history. Okay, we're going to talk about this. There's a lot to say about that. And then the site traffic obviously coinciding with the earnings. Okay, so first of all, I understand this to be a business that publishes content on software engineering and web development type of stuff, and also has courses, and they monetize the business through display ads and the courses. We don't know what the break is here in monetization between paid courses and display ads, but I like that they have two different sources of revenue. It's not purely display ads, and they don't mention it here, but YouTube could become a source of revenue as well. YouTube pays ad revenue earned on the channel. They don't mention it, so I'm going to assume that that is not something they're doing right now, or is just not an opportunity that they have. Channel may be too small for it. They get that email list of 17,000. I like that. That means that they have started to pull the audience into their own ecosystem. And yeah, I think that basically kind of points out or summarizes what I like about the business. It's a digital product. They've got multiple channels of revenue. They've built their own ecosystem for it here. Let's talk about some of these other things that I don't necessarily like, and that is that one of the owners is featured in the videos on both YouTube and digital products/courses, so maybe there is some seller dependency risk there. But then they point out that some of the course content/creation is also outsourced to freelancers. So they also have some freelancers. I would want to see of the recent products that are being sold or have been created recently, what has been outsourced, right? And could this business exist without the seller, current owner, being involved in the content creation? Is he just a person there, or is he the face of the brand? That's something that would really need to be deciphered. And then the earnings. And my gosh, I have to say, this doesn't look good. I don't know how else to say it, but it is in a significant downtrend. It looks like it was earning quite well in 2022, and then it was trending down. I don't know how they were able to spike the sales so much for the Black Friday season, because that was a significant spike, and then things just kind of grinded out here, grinded to a near halt. Yeah, that is just not a positive trend that it's on, right? So what's my take on the trend? Well, first thing, ChatGPT came out back around here in the end of 2022, I believe, and ChatGPT has had a significant impact on the ability to teach people coding and the ability to do coding themselves. So I would want to flesh out, has this business been impacted by ChatGPT, and what is the market like for these software engineering courses and content since ChatGPT was released? I think it would be significant, but what stands out is that the trend wasn't steadily down. Somehow they were able to get traffic to spike here, and at the same time, site traffic on their site traffic on their website has been declining as well, and that correlates with the drop in revenue. So maybe the drop in revenue and subsequently profitability is not tied to the release of ChatGPT at all, but it is just tied to the traffic on their website. Now, noticeably, I don't see any drop in traffic or spike in traffic coinciding with the revenue and profitability spike there of the holiday season 2024. I would certainly want to see how things play out, or have played out, right? We've already got Black Friday behind us, in 2025. So there's some things I like here, and I'm actually overall quite optimistic about this business. I think that there's a lot to like here. I think there's some kind of meat and potatoes. It's been around for 8 to 9 years at this point. There's something here. This doesn't seem like a, garbage digital product business, or something that, just spiked up and is going to die. That said, it is at the moment on the track of a slow death. So let me talk about the valuation here and share my opinion of this business's valuation. Whenever I'm considering the valuation, I always start by assigning a multiple to the business model, and then multiply that by what I would expect the future earnings of it to be. And here we've got a digital product business. It seems to be selling robust, but I would guess that possibly the content is maybe a little aged and dated. They've got their own subscriber and audience base pulled away from the website, and they do have a network of, or maybe not a network, but they have some contractors that can create the content here. I'm going to assume that the seller is, or that the business is not reliant on the seller's face being in all the content, but I'm also going to make the assumption that the content is maybe a little bit aged and dated, considering that it had been around since 2016 and the business is on a downward trend, right? If the seller is completely removed from the content of the business and the content is current, it would go for a much higher valuation. But I think that based on the assumptions, I think that this business would likely fall into a 3 to 4x range, maybe stretching it if things were really good, but it's not. So considering that, let's just forecast out what things would be in the future going forward. And to do that, I'm going to clear out of my little tool here and just look at this. and say that right now the net profit line is based on this around $2,500 per month. And if we go back 12 months, the average net profit line there is a little less than 5,000 per month, so say 4,700. So that represents a decline in profitability of about 40%. I mean, we could just do, what would that be? 4,500 minus 2,500 divided by the 4,500. It's going to represent a 44% decline in profit. Let's just say that over the next 12 months, the profitability declines 44%. So they're saying the average there is 6,000. 6,000 times point, is it 5 roughly? $3,300. Multiply that out by 12, and then assign the valuation multiple to that of 20x. Excuse me, it would be a 1.6 because we're now on an annual basis here. And that's at the 1.6 multiple, is going to put it in at 66,000. But I said that the business model is, would be a 3 to 4x valuation. So let's divide it by that 1.66, get back to the future profitability and multiply it by 3. I started, mentally there, I started going down the road of a monthly valuation. And we're going to shift gears to that annual valuation, which is what I was speaking in. And then we see that this thing is priced right on the money at $120,000. So yeah, I think that it is appropriately valued here. And I think that there is some opportunity at this listing price of $120,000. So on that note, if you are out there and you're interested in acquiring a digital product business, this might be worth taking a look at, and I think that the seller has a reasonable or realistic expectation. Before signing off, guys, if you found this video helpful or insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. I am calling it a wrap and signing off on that note.